Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwago. On the show today, Afrexim Bank and FCI to promote factoring to enhance access to financing for East African SMEs. Kenya and Germany to develop new cooperation framework to ease businesses. Nigeria picks Egypt Air Consortium for aviation venture. We'll begin the show with intraday numbers, and markets in Africa were mixed at intraday. The Nigeria index gained 0.14% thanks to gains from the banking and consumer goods sector. In South Africa, the JSE index was unchanged after suffering its biggest intraday fall since 2016 on Monday, as the benchmark index extended its slump to 4.28% amid fears of increasing coronavirus cases outside China, which sparked a global trade-off. The market in Egypt was negative, while Kenya closed positive on Monday. And most major Gulf markets extended losses at intraday, with Dubai's index falling the most by 0.86%, as blue-chip developer Emma Properties lost 2.1%, and Sharia-compliant lender Dubai Islamic Bank was down 1.11%. Only the Abu Dhabi index was up at intraday by 0.11%. In Qatar, the index shed 0.68% due to losses from Qatar Islamic Bank and Masayad Petrochemical. Saudi's index was also down marginally by 0.07%. In Europe, markets opened in positive territory despite widespread concerns over the spread of the coronavirus in Italy. Well, let's cross over now to Frankfurt Stock Exchange, where my colleague there, Chelsea, is standing by to tell us more. Hello, Chelsea. Good afternoon. Well, global markets stabilized today after European shares posted their largest drop since 2016, a day earlier on coronavirus fears. But is it too early for this kind of optimism?
I think it's certainly too early to be calling for some sort of bottoming out in the spread of this virus. Yesterday, we obviously saw a massive sell-off in global stocks. Today, stocks are still quite mixed. The DAX and many other European indices opened up a little bit higher, but most have given up those gains throughout the day. The DAX is down about 0.5%. The FTSE MIB, the Italian index, is down a little less than 1%. So there's still a lot of uncertainty and there's still a lot of fear. I think investors are really tracking quite closely the spread of new cases outside of China, where cases have started to level off in recent days. The number of cases overnight in Italy has also seemed to slow, but we just got word that Austria is reporting new cases as well, and they had been quite concerned about a spread of cases from outside of Italy, since they are neighboring countries. So I think investors are still really watching that closely, and also, of course, what the economic impact of this is going to be. Many businesses in the Lombardy area, where the outbreak is centered in Italy, have closed shop. Some factories have shut down. There's obviously already been a huge impact to tourism, and that's all going to be quite difficult for both Italy and its European neighbors.
Now, the EU member states are set to finalize priorities for trade talks with the UK. What does the EU want out of the negotiations?
Well, the EU is really pushing for what they call level playing field parts of this negotiation. So they really want the UK to stick to the EU's regulations on things like environmental policies. They want the UK to stick to regulations on labor, on health and safety. So they want the UK to really be aligned with EU policies. The UK has said it doesn't want to do that. That was the ability to be more flexible, to break away from EU regulations, was one of the reasons why they wanted to leave the EU in the first place. And we're already seeing this conflict play out over issues like chicken imports. So the the UK is trying to strike a trade deal with the US, and the EU is saying you can't import chlorinated chickens into the UK, that would be a big sticking point for them. So there's a lot of difficult issues that the two have to address over the coming months. But the EU has obviously set out what its goals are, and the UK is expected to release its negotiating priorities on Thursday.
And data out today shows that German companies and households both clamped down on spending at the end of 2019. What's behind the hesitance to invest?
I think that's really a puzzling question for economists. German businesses have for quite a while been quite hesitant to invest. So capital spending, big investments in things like machinery, German companies have really been avoiding that for several quarters. So this is the third consecutive quarter that businesses reduced investment. That could be because they don't think it's going to be worth it, that they're concerned about there being demand further down the road. So it could be signaling a potential state of uncertainty in the economy. But I think investors and economists are really concerned about the slowdown and private consumption, which has really been very strong in Germany over the past few years. That's been one of the key drivers of the economy as the manufacturing side of the economy has slowed. Consumers have really been, carrying the economy here. It ground to a halt in the fourth quarter, and I think we need to see more data, but that could certainly be a big problem for the German economy if household consumption continues to slow.
All right, Chelsea, thank you for updating us on those developments. Enjoy the rest of the day.